Kareem. I had expressed interest, and as somebody new, I wouldn't expect that that you would have a great perspective yet, because what it was I was asking if anyone would want to provide a testimonial that is just we're partnering up with a couple of trading groups that we think would provide the right type of people, the right type of traders to contribute to this. The last thing we want to do is oh, you'll be rich if you, and then have a bunch of bad traders jump in, and all of a sudden our dynamic is thrown off. And so it's a delicate ecosystem. And then so we want to make sure that the message is to attract the right type of traders that will benefit from this and contribute to this. And so what I just was asking for was if anyone wanted to mention how the group has helped change trading for them. Like, that's what we're not trying to market. Like, you all are here. You've seen how marketing in our industry goes. And there's a lot of, what I hate in marketing. And I want to market where the message resonates because somebody's looking for something particular, right? That we offer. And I feel like if we can vocalize what we've already done for some people this caught it. This was what I needed to cross that tipping point and get me where I'm more consistent on a regular basis. That was it. And so a few people said, yeah, I don't want anything too lengthy, or I just want to be able to put John S. said, I've never had more clarity with how I see the market. Those are the kinds of things where it's if that's how you feel, if what we've given has helped shift fundamentally, that's what I'm trying to capture. And then if there's a highlight that you've been oh man, I had this great trade right when the market was taking a dump and it just felt good to be on anything. That was it. Anyways. Okay, here we go. No problem. No problem at all. I appreciate you, saying something. Let me get cracking now. Welcome to Sunday Market Insights, my favorite day. I love Sundays. It's even before the group, Sundays were always my favorite days in trading. And I don't know if you guys did Sundays, if you did Saturdays or what. I think a weekend day is so important because the chimp's in the cage, right? It's there's no risk. We're 2 days away from when we were last in that risk mode. We're a day away from the next time we will be in that risk mode. This gets us that ability to be just a little bit more rational and logical and establish as much as we can and get it in place so that once the chaos begins, we can rely on that and just kind of anchor to these processes that we put in place that we kind of move through, so that when we're in the 6.5 hours, I don't want to be I wonder if I should be doing this or that. I want to be I know what I'm doing. I know exactly why I'm doing it. I know what I'm looking for to change. What are my marks that will trigger me a little more bullish, a little more bearish? What will put me here, right? The more that I could just kind of lay this out and put it over top and move forward in that construct, what I'm looking to feel is control, right? It's very difficult. The reason that's a hard thing is we're blades of grass. It's hard for a blade of grass to feel like it's in control of anything when there's a lawnmower around. And that's all we're doing is playing with the lawnmower. I think that's why it's hard. I think that's why a lot of people never get to that point where they feel they're what do you mean? You're in control of the market? No, of course we don't think that. That's ridiculous. We're in control of ourselves, our rules, our trading, that's when all of that's in place, your trading will feel different. And that's my premise. As always, education, illustrative purposes only. Nothing we do or say should be construed as a recommendation to buy or sell any security or financial product. We're not brokers. We're not advisors. What are we going to do? Let's posture. Let's talk about it. It's going to improve. We've got some bullish things on. Are we feeling now we're bullish? Are we feeling ooh, we're still pretty cautious? Are we feeling like, you know what, if this thing starts to turn around, I'd probably still throw something bearish on? Right? Let's talk about how we're feeling, what it means. What are the no matter what, there's always two words with a question mark that dictate as we go through anything we do in trading. Now what? Okay, now what? I mean, it's whatever concern we bring up, whatever we flag, whatever we determine, you still move to those two words. Now what? You got to do something, right? So what's it going to be? What are the implications? How do we take all of this and then actually put it? And that's why I love the way that we move from Sunday to Monday. Nothing's changed other than the futures have been running, right? They kick in around 5 p.m. and we can start seeing, what's everyone thinking? And then we can look again. Okay, be honest. tell me if you're a Sunday night to Monday morning futures watcher now. I can't help it, right? Like around dinner time, I start looking, I go to bed, I wake up in the middle of the night, I just take a quick peek, and then I see them in the morning. It's always interesting to see how they move and then what we open at come Monday, right? And then Monday comes and we take all of this and now we're like, okay, we're 15 minutes away from the market opening and you've got these trades on and you've got these trades setting up. For me, the priority is always 100% skin in the game. Where I have skin in the game is the priority. I'm going to always prioritize trades I'm in over trades I'm thinking about. That's one of the biggest mistakes. That's one of the biggest mistakes that I see traders make is they start thinking about prospects and then they lose sight of trades. And then when they go back and panic because they have to manage the trade, then they lose prospects. And so what happens is, by prioritizing incorrectly, you lose both. We got to start and always orient around where skin's in the game and make sure it's managed. There's a plan, exactly. No matter what happens come Monday morning, you know what you're going to do with every trade that you have, whether it opens up, down, or sideways. And then once it opens, then what? And then you can be thinking, okay, those are organized. I'm in. Opening range is set. Now I can do some day trading. Now I can right. Nice job, Kami, on the Tesla. Now I can move into whatever's next because you don't want to be stressed in whatever you're doing day trading because you're like, oh, well, how's everything else? Everything's fine. You already looked at it. You don't have to go back because you already managed it. Anyways, okay. We'll look at the calendar. It's a first week of the month, so jobs, right? We'll have non-farm payrolls. We'll have ADP. Job openings is a little more fluid. I've seen where it kicks to the next week by itself. I can't remember if that happened this week or not. What's the discussion around jobs? It's are we going to see the weekly benefits, the weekly unemployment claims jump based on, Doge firings or based on anecdotal, so far anecdotal. That's what I'm saying is we haven't seen any data that suggests that the employment situation is deteriorating in any manner. So the question becomes then, if it's there, what's the holdup? And one of the things we discussed was, of course, the lag from severance packages. So there could still be something that's just kind of sitting out there. What was the consensus for the government? And what was the number? I think we should be able to gather that. And I think the hope is that 9 months is enough that that there's not a wave, but I'm curious, is that something that we should be concerned about? So far, we haven't seen it show up. But point is, that's what we're going to be looking for in this week's economic calendar. Watch list maintenance. I think it's about time that we do the watch list maintenance, which means what? Which means we're going to want to start cleaning out things where we're like, you know what, as this dust settles and this poll shows back up, if it's not one of our core, industry group leaders, those always stay around. I'm always going to keep those. It's going to be the peripherals where we start to throw out old ones, and then we're going to start running some searches on Tuesdays and Thursdays. So if you want to refine your search mechanisms and parameters, certainly join us. We do it on a sector by sector basis because we do a great job of sector rotation analysis to see where the money flow is starting to move. That's going to help point us to the right sectors. We're going to go to those sectors. We're going to find the stocks that are seeing the most amount of money coming from institutions. We're going to put them on our watch list, and then we're going to trade them. It's a process. We're not doing anything like, oh, we're going to go try to find that one great needle in the haystack stock. I don't know, needle in the haystack. That sounds terrible. I want to find, just find the leaders at any given time and put them on my watch list. That's what I want to do. That have good options, that have liquidity, that meet the parameters. That's it. We'll build our opportunity list, and we are now moving on to, look, can you see how fast we're already almost through our second pass? If you're new, and I'll tell you what, we're implementing something new for the Tuesday, Thursdays. I'm going to be excited about that. Glenn and I are working on it. It's kind of, so we have like an 8-week loop for our trading plan. That's the big, broad, that's the meat of what you're building. That's the tangible asset that you should be working on during this group. But we're actually thinking about, yeah, that's great. But if I'm brand new, am I thinking, well, I can't not trade while I build that, but I'm also trading without maybe necessarily having all of the elements. And so what we're actually looking at putting together is a beginner's blueprint. And that's going to create a 2-week, 4-day cycle, a loop. So that if you're new, no matter when you join, you'll be able to just jump into this little 2-week loop. And this loop is going to have, what is the bare bones that I need to trade? I need to have a risk management in place. Not the whole thing, but I need to have a position size formula in place. I need to have trading rules. I don't need to have like these expansive rules, but I need to have setup, entry, stop, right? I need to have, and so that's what we're working. Tell me if this resonates. If you're new, or even if you're not new and you're thinking back like, yeah, that would have been great to have like something that I can start with that then is a primer and leads to that bigger plan. And so that's what Glenn and I are working on, and we're getting pretty close to that, where it's just like this 2-week, do you have these, it's a touch on rules, a touch on risk management, a touch on psychology, right? Where, you're not thinking, I need to have this great 15-page trading plan before it. No, you're building that plan through experience, Anyway, okay, let's get into it. It was a little long today on the agenda. That's why I apologize. But cool things are coming. Let's posture. We're at a minus 2.5. We've spent 3 weeks. You'll notice we kind of, Jose says first week loving it. Love that we love having you and that you're enjoying the group. I'll tell you that. Here's what we notice. You'll see it here. We were sitting in this 4 to 4.5 range for weeks. And we were just hoping, you guys remember, hoping that it broke out to the upside and popped to a 5 and a 5.5. And we're like, yeah, we're bullish. Let's go. We wanted bullish spring. Oh, we wanted that bullish February and March and April. Oh, we look back fondly. And what happened? It broke down. And as soon as it broke down, if you go back and you listen to the recording from March 2nd, you're going to hear us talking about, this is not good. This is like, now our risk has to tighten up even more. Now we're going to look for more bearish trades. Now we're going to, right? It was a whole thing about, how, and that was just from a 4 to 2.5. And then it just sort of fell into its next range, which was 1, 0, 0, 0. So we're just kind of sitting in that range for a few weeks, and then it broke again. Okay, so now we've been sitting here, right? We broke, but then we've just been kind of stabilizing. We're here for 3. So does it break up? Does it break down? Does it sit for a while? How many points do we need for a breakup? The last time we broke out of a correction, we don't have a bear market. This is our first bear market as a group. The last bear market was in 2022. We started early 2023. I mean, I could probably recreate. I could go like take some pictures of like other logs that I have that would kind of illustrate it. But what I'm looking for the last time was like we jumped a point and a half, in 3 weeks, just like bam, and it started. Okay, that's kind of what I'm looking for. Are we going to see that? Are we going to see only a little bit of a bullishness where we're like, okay, that's pretty good, but I'm not going to open my risk yet because it just doesn't feel like we have what we need. That's kind of the mindset here. Okay, let's get into it. Where's my charts? I know they're good because I logged in 10 minutes before. Let's get out of the Heiken Ashies. And let's move into the weeklies. Okay. So the last time we moved this score was on this candle here, this week. On this week, it got hit for a double. Right? At this point, it was still on this old red trend line. It was like, hey, if this thing holds, we can let it sort of dangle in. This is about a 1 score in here. And again, to highlight if you're new, every component has a video. Make sure you go check out the courses section of our page. There's a lot of good educational video series things in there for you to just kind of play at your discretion. But ask, please, if you're new or not, ask if you have a question. There's no trend here, right? We're trying to analyze the trend. Back here, you can see how we could spot trends. We could draw them. We could shift as we needed to shift. We're pretty fluid. And I know a lot of people complain about my SPY charts. These are my only charts. Here's what's funny. Let me show you this. You can actually see in the left-hand corner of my charts, there's old remnants of lines that just sort of fell apart and they're just sort of hanging on. What's the meaning of the red lines? So these different red lines are different trend lines. You can see how these red ones are all the same angle. And you can see how the blue and the green are also the same angle. And this helps us to kind of see blue is 1.25. There you go. Yes. Love it. 1.5. Yeah. Oh yeah, you're right. I'm sorry. There was the same. Yeah. But what Miguel is flagging, and thank you for helping, is simply on a 2-point scale, 2 being the strongest. You won't see a 2. I've never scored at a 2. I don't know what a 2 looks like. I don't know if that's the strongest I've ever seen. It's very difficult for it to get above 1.5, just because, right? It might kink above it a little bit, but so when you look at that green and the blue, that's pretty much as good as it gets. That's what we're looking for. When you have a strong, that's over a period of 1.5 years. When you have a good long-term trend, that's what it looks like. When you look at the red, you can see it's just not as steep. Well, the red is kind of what we do. This is coming out of, let me so you know what I mean when I say this. This over here is coming out of the bear market. That was the bottom of it. And so you can kind of see it stabilized, and then it started to go. And so you can probably imagine our posture would be stabilizing, and then all of a sudden you get these higher lows, and boy, you see that, and we're ready to go. I mean, our system right here, that's the second higher low. We are bullish at that point. Like we're ready to roll. Maybe it's only a 1 or a 2 bullish, but remember, it's not necessarily the score, but the momentum. If we move from a -3 to a -1 to a 1, it's neutral on score, but the momentum's bullish and we're flying. We're like, yeah, let's get bullish trades on the table. So what now? Nothing. We dropped out of our trending there. For all I know, it could just go sideways for a little while here. Boop, 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 boop. Right now, we're at a 0.25. Okay, that's all I can give it. Until I break back up above. If I break back up, I'll give it a quarter of a point. But right now, for me, this is not I'm trying to score something. This is if it takes out a high, plus 0.25. If it takes out a low, minus 0.25. And if it just sits and dangles back and forth, we're not going to do anything. It's just going to sit as a 0. So, yeah, we'll see what happens. No change there for me. Let me know if anybody... Yeah, Miguel, I have no doubt Miguel's charts already look better than mine. It's a sad thing. I've been doing charts for 20 plus years. But the way I've charted, it's the way, you know what it is? It's a funny thing. If you look at my handwriting, it hasn't changed since I was like 8. Never. It's the same. My mom's like, you know what, Scott, you're going to have a hard time getting a job with that handwriting. Not only did I prove, I actually have had a job where I'm writing on boards. And I'm like, it's fine. But my chart reading probably hasn't changed in, I don't know, 15 years. The way I draw that, it works. So I stick with it. Okay. Questions about long term. Tell me if yours is shifted. Tell me where yours is, if yours is different than mine. Let's get a little discussion. I'm just sitting in this neutral. It's been there for 4 weeks. I don't have a real good read. We can see the buyers want to try. Great. Let's see if they can do something. Let's move on to short term. Short term is 6-month daily. Bob says he agrees. Thank you. Short term absolutely has changed. So this is the dotted line right here is expiration. That's where we were last time. What's happened since then? Even though we started lower on Monday, the fact that we turned right there, we made a low. Where was our last low? Down here, right? Well, this is higher than this. Great. Plus 0.25 for that. Well done. Well done, short term. You earned a score, a brownie point of 0.25. Now, here's the second one, though. Oh, I don't know. I mean, whoops, that's not a good line. You know what? Let me draw with the straight line tool. This is important. I need to use this straight line tool. And I'm going to go across. Oh, I don't know. We did get higher than here. But as a zone, I feel like we're still kind of in this support resistance zone. We definitely, if you don't really, I'm kind of connecting that FOMO day. Theoretically, that was the last high. If you don't count that, and we did get higher than that. I'm on the fence. Steven D is going to try to convince me to add another quarter of a point because he loves giving the Bulls a little extra credit. And I have no problem. I mean, I kind of agree. I love like when the Bulls, I feel like I can only give it one. Do we hit it for a quarter of a point or a half of a point? Give me your thoughts. I need to hear from the group. Okay, Steven. Oh, that's it. I don't even need to hear from anyone else. If Steven's like, no, then that's it. It's a no. It's 0.25. Kami's like, Kami's in for the half. Yes, Kami's a bull. Quarter? I'm going to go for the quarter. I'll go for the quarter. It was close, man. It was really close. It finished near the high for the day, but I just feel like another 0.5%. It needed another 0.5% and it just didn't get it. Okay. Very collaborative discussion. I got mostly quarters there. I'm going to stick with the quarter then. I thought that one could have given a little bit more, but we're going to bring that to 0 now. All right. Rating it for it to pop. Thank you, Stephen. And there you go. What is he talking about? We're talking about, when you hear me say, what are my marks? That's a mark. That's a mark. What's he looking for? If it breaks that mark, what? More bullish. More bullish. That might trigger a continuation trade at that time. Because when that breaks, you're not likely to have a bounce trade. But you are recognizing that's a bullish signal, right? And so, yeah, I think that's important to have those marks where we're like, no, I need this. This is the mark. And if it does it down here, this is the, makes it easier during the week because you're not like waiting to react to something. You're proactively waiting for something to occur. I think it's a different mindset. Thank you for contributing. Everyone, let's do volume. Let's do volume. Volume's interesting right now. Because what's happening is the score has gone better, not from a surge of buyers. We've had a couple of days of buyers, but mostly from a drop off in sellers. So at this point now, here's what we have. We have 1 day. I'm going to need the group to weigh in. We have 1 day that disappears. Actually, 2 days. No. Yeah, we have 1 day that disappears. And then we're going to say it's 1, 2, 3, 4, 5. Technically, this one will, but I'm going to leave that one alone for now. And then this is the next week's worth of data. So this is still okay. Next week, the one in the red box we'll consider to be stale. And we'll probably be like, you know what? We're just going to throw it all out. This week, if we threw this out as the lone buy day from over here, and we said we're only focusing on this, that's a little bit what I'm leaning to. Buy, sell, tie, sell, buy, sell. A need for optimism. I think there's I don't know if I would say a need. I would say a cause. I would agree with a cause for optimism. A recognition that they're not going to just like run a bad strategy into the ground. That there's going to be, I think they've put themselves in a corner of how they come out of this because China's unrelenting and have shown to be superior negotiators as of now. I think is clear. I don't know. Karine, I am agreeing with you, right? We haven't had anything new. It feels very much like it's going to put us at a 0 still. What were we? I forgot to even look what we were. Are we a 0 or a minus? No, we're a 0. Yeah, you know what? That feels right. That feels right. This is all just kind of washing out. You're right, Steven. Steven said there's still, this is our sanity check where we just take the 2 points and connect the lines. And it's very ever so slightly sloping down. But we recognize that we're coming from a pretty negative slope moving higher. 0 works for me as well. Which means at this point, whoever gets the volume this week, if it's a positive, if it's a tie, if it's like 1 buying day, 1 selling day, I might still give that. At this point, I might throw all of this out and say, let's start over here. Which means if we had 1 buy day, 1 sell day, tie goes to the buyers. That would actually raise us a little bit. So Steven says he smells buyers coming. We'll see if his sniffer's on the scent or not. Okay, let's go. let's go get to the let's go get to 2 for 2. All right, fair enough. On the 200 day, making sure I'm all the way over. This looks quite defensive. The Dow's on top. The Nasdaq's on the bottom. The S&P's in the middle. A little bit of rustle. Like, ooh, hey, maybe there's going to be something there. We'll see. But as of right now, that's leaning towards what we have. As I move it to 133. So if you're new, what are my time frames? 200 days is approximately 9 months. 133 is approximately 6. We'll go to 66, which is approximately 3, and then we'll do 22, which is 1. What are we looking for? We're looking for momentum. We're looking for strength and momentum and shifting. And here you can see, hey, look, the Nasdaq, which was down here and down here, shot up a little bit. Is that enough to change my score? No, but I'm like, okay. Now this is our scoring stage. We had 2 defensive foundations with a little like cock our head of interest. What's that? But we get here to the scoring time and I see the Dow on top. I see the S&P on top. I see the Russell and the Nasdaq lagging. They're coming off the lows. They're trying, but as of now, nothing has been accomplished yet. I don't see press here, but this is press's beautiful 22-day time frame. And what do we have here? Our first signs of life. It's not scoreable though for me yet. If it was a tie, if I was on the fence at the 66 day where I'm like, I don't know. I maybe want to give this something. Then when I got here, I'd be like, hey, yeah, you know what? Look at that. The Nasdaq made a little bit of a surge. It's good to see. It's good to see that it's made a little bit of a surge. But other than that, just kind of a non sequitur. It's not going to move it. So, okay, Steven moved his, not me. I'm -1 still. I'm a -1. I didn't see enough. I need to see it on the 66 in order for it to move the needle. All right, let's go to the sector rotation. Anybody else weigh in? Where are you at so far relative? I thought it was going to be a better improvement today. I got to be honest with you. I thought, oh man, we might see a point. Knowing that a 1.5 is kind of what we need to be like, that's the kind of thing that could sustain. I just don't think we have it yet. Maybe we'll see. But we haven't gotten anything yet. Let's go look at sectors and see. I kind of am a little bit leery. Who's leading? Financials? Utilities, 1 and 1. Who's next? Staples. Communication services, 1 and 1. Right? A little bit of a surge. I mean, you can see discretionaries down here. You can see technology. Or you can see, technology's down here. Not a great start. Pretty mixed bag. We go to 133. We see a very similar type of a thing where we have financials, staples, utilities, and communication services. Those are the 4. Then you have discretionary. And then down here, way at the bottom, materials and technology. Then we go to 66. So mixed bag. Scoring. Who's leading? Staples, defensive. Who's second? Utilities, defensive. Who's third? Healthcare, quasi-defensive. Financials, that's the first we see. Down here, discretionary, making sure. Oh, nope. Sorry, guys. Let me start over. Let me flag what happened for those of you who are somewhat new. This, I don't know why this happens, but if you look, my analysis was kind of kinked to the side here. You always want to make sure this is all the way over. I'm not sure how it ever starts when it's not. Reset completely. Reset completely. Staples still on top. That's still defensive. This is still going to orient towards the minus 0.5 score for me. Utilities still on top. Healthcare still on top. So even though we didn't get all the way over, it's still those first three on top. Who's on the bottom? It's still technology and still discretionary. So this one doesn't have foundationally as bad. It's mixed. We have 1 and 1, 1 and 1. So it's it's okay. And then here it's no. That's why I'm a minus 0.5. Now, if it was defensive, and then this, I'd be a minus 1. But it wasn't. It was mixed, and then this. I'm a minus 0.5. Minus 0.25. Okay. It's close. It's close. Anybody else want to weigh in where you're at? Let's go on. Last thing. Gosh, I thought there might have been a little bit of an uptick. The fact that we didn't, for me, makes me feel like last week's buying was somewhat hollow. Somewhat hollow by way of institutional money movement, right? There was buying, but do we believe it's a fundamental shift? Not yet. Not yet, which means we're still pretty sensitive if some bad news comes out. Let's finish with the VIX. That's important because that's our real strong read on institutional sentiment. It's going to come from the VIX. Okay, so we got something here, actually. We got two things here. Now I remember why I had a little bit of hope. We hadn't gotten there yet. So we have two things, right? That was a pretty important level right there at that 30 mark. You can see we had gotten all the way to that 30 mark back there. Why was that important? Because that's where my last high low came from, right? So it marked a low, and then I got this. Now, where was my last high? My last high was up here, right? I draw these because when I think about highs and lows, I don't want you thinking, well, it's higher today than it was yesterday. I want you thinking highs and lows, meaning peaks and troughs. That's why I put the upside down in the V. So we have peak, trough, high, low. That was a high. What does that mean? That means that is a lower high. What does that mean? Plus 0.25. Plus 0.25. What else happened? That. What happened there? We broke the low. Plus 0.25. There it is. For me, that was a great transitionary week. Because on the first day when the VIX came back in, it only went to 35. Right? It only went to 35. And now we're back into the mid-20s. This is the most favorable aspect of the market posture. And you guys know I worship at the altar of the VIX. This is a big one for me. This is where most of my hedging activities come from. This is a big one. To see this is actually probably pushes me a little more to feel like Kami, and that's saying, hey, this needs to be recognized with some bullishness. The institutions, what's happening here? So when the VIX spikes, that's institutions panicking. Just so you know, how do we know that? What's causing that? What's causing that is institutions are buying puts. Buying puts. Why? To hedge. Because when you and I buy puts, we don't move the VIX. Right? What moves the VIX? Institutions move the VIX. That's an imbalance that cannot go unrecognized. That imbalance is like buyers. What are the market makers of the options market doing? They're raising prices, supply and demand. So if institutions are all of a sudden buying, and they're buying a lot, so are there institutions who are on this chunk? Yeah, those are the guys who aren't institutional money managers for long, because they bought puts at the worst time. And now what's happening? Now there's institutions are doing what? They're not going to just hold on to puts until they expire worthless. They buy them when they need them, and they sell them when it's advantageous to help offset short-term losses of holdings that they're keeping. So if they primarily held things, and then now what are they doing? Well, they're selling. They're unencumbering themselves. Are institutions going to hedge and buy stock at the same time? No. They are not going to compete against themselves. They might, okay, net buyers, no. Are they going to load into some positions but be net buyers? No, they're going to be strategic. When are they going to be net buyers? When they've taken off their puts. When they want the market to go up is when they've unencumbered. That's what's happening here, is that unencumbrance, that the institutions are now moving this thing coming back down. The VIX is a direct correlation. In fact, if you go to CBOE, the CBOE, this is theirs. CBOE market volatility. This is proprietary to the Chicago Board of Options, and they have a white paper on it. But it's the gold standard that now is used. So when you look at how option volatility is calculated, when you look at implied volatility, that is modeling the IV that you see at the bottom of my chart. That's placed on every chart that I look at that trades options. That implied volatility is modeled after the VIX formula for S&P 500 index options. That's what the VIX is. It is a formula that is pricing volatility, and which is expectations on S&P 500 index options. That's why it's important, because those S&P 500 index options are representative of institutions. Maybe a few like enormous retail traders, which fine, they're basically institutions, right? We trade SPY. It's liquid, it's fluid, it's cheaper, it's easier. SPX is where the institutions are going to do a lot of trading. And when the institution buys a put to protect their portfolio, that's going to influence the VIX. This here is representative of massive waves of put buying. Oh, did any of us here happen to look for a higher low? We all did. We all did, right? Like that was there for us. That's why this is such an important indicator. That's why I told Glenn, I'm like, Glenn, you will join me. He's like, yeah, I look at the VIX sometimes. I'm like, what? I look at the VIX all the time, every day, multiple times a day, every weekend. This is the institutions tipping their hand. This is the best, most valid, most honest, most unmanipulatable information that exists that helps us understand what institutions are doing. That's why it is my hedge North Star, because it's going to be accurate so often. And that's why this is so important to us. The fact that this is broken down like this is the best read of all the information that we have. Okay, so let's go market. I was like, I swear I thought things were going to get better. Minus 0.5. Okay. Oh, it was okay. We got we got 3/4 of a point. Oh, Miguel, I'm glad I did it then, because it is so important to review over and over and over and over and over and over again. That is such a critical indicator. That indicator had me in puts and out of the market completely for the COVID crash. I had puts on place from nothing other than the VIX. I could go back years. I could show you in 2015. It's such a great indicator to help us understand when things are actually improving, which is what we saw. And so even though I only have three-quarters of a point improvement, the fact that a chunk of it came from the VIX is actually quite optimistic for me. So let's go look at the watch list. Yeah, sure. Kami asked, can I use stochastics? It's still it's still moving at a way that the technical tools are still going to be useful for us. And so, yeah. It's oversold. Yeah, it is down here very low right now for sure. But you know, quite honestly, and it's a funny thing because a lot of people, when they use stochastics, they love to look for when things remain in over. Like if this remains down here, that would be fantastic. Kind of like back here, where it's a little stronger. But yeah, we'll keep talking about it. Most definitely. Let's get to the watch list. We have 10 minutes and we'll get to the section of the trading plan. But I will say this as another mark. Let's say that we start off and we stall and then a little bit comes in, right? Well, if it comes in like this and stalls again and starts to roll over, that's another mark. When we look back, some of the best trading occurs in a de-escalatory, is that a word? A de-escalatory environment of the VIX. Those are your, in hindsight, you're like, oh, I should have done more. So great. Make sure you're in real time talking about, does this feel like it's one of those where we're in a de-escalating, it's going to continue? Let's be ready. Right? Let's be ready. Fear is declining. That's absolutely how we want to put it. And it's not just fear. It's not like mom and pop down the road like, well, we feel better. This is institutional fear. When they feel less fear, do they still have powder in the kegs? 100%. They've got plenty of capital to put in the markets. Plenty to put in, right? We've had, they've been sitting on all the cash that's been coming in since basically, the new administration. Not much of that's gone into the market. So all 401k contributions and all the money they're just sitting on that. They're ready. It's ready to pop. Let's be ready with them. Okay. Watch list. Let me move you over here. Let's start. We're just going to go kind of fast. We're still in earnings season. You still got these here. I mean, if you didn't trade this one, you're probably not going to, right? Whatever you did bullishly, you're in. The signals were coming in these days here. And now we're hoping it just kind of carries through. And if it doesn't, we'll manage them, right? I would imagine you're carrying at least a couple bullish trades. Maybe still sitting on something bearish or a piece of a hedge. AbbVie popped on earnings. Yeah, great. Higher low pullback. I'll trade AbbVie. I'm not a huge healthcare fan, but I kind of feel like, hey, I've been watching it. I'd like to be rewarded for it. This one here, how it's just kind of grinding sideways. There's no need. I don't love AEE. There was nothing about that made it pop into my list. Amazon, I'm always going to watch. Bank of America, I'm always going to watch. Caterpillar, right? Things like that, I always watch. But some of the peripherals, we're going to start to pop them out of our list. Let's see if Apple's going to get out of this channel. Funny enough, this channel that I have, this channel was drawn at least a year ago, or at least 6 months ago. And it's just sort of existed. And look how well it's played out. These outliers got a little outside of it, but other than that, this channel has come back into life for me. I love when that happens. Baba Baba looks bullish, but waiting for it to pull back. Oh, my favorite. I still feel bad because, PLTR is my favorite. I've got them both on still, but I did get the NVIDIA out for the group. BAC, I don't have it on, but I'm looking for bullishness. I'm looking for bullishness in the financials. I'm looking for some recovery, and they can recover quickly. Caterpillar, earnings are coming up, but starting to see signs of life there. Sienna Corp, I like Sienna Corp. This was actually, you could have traded this, I think. Popping out of here. I'm fine waiting for the next one. CLS, waiting for the pullback. I like CLS. It's had a great surge. What would people call this? Well, if it pulls back here, that's a head and shoulders. That's a neckline. Well, it's closer to those. Oh my God. It's like I can't draw. Closer to these peaks. But I would trade the higher low. That's what I'm looking for, is the higher low coming out of this next move. CME, that looks nice. Earnings, they made it. Looks good still. CMP, still strong. Same thing. I liked Cisco. I didn't end up pulling the trigger, but I think you could have, and it's still kind of showing some signs. This is one that I was looking at for next week. There was a couple. I still think there's time if we get the signal in the next day or two. So if this thing pulls back and then turns and it gives us that next thought, I would trade it and then see about. I do not want to hold through earnings. You can see what happened last time at earnings. And the time before that on earnings. So it doesn't tend to do well on earnings. Enbridge, you need a pullback. Fastenal, this is kind of stuck in a sideways channel, a basing pattern. FI got beat up on earnings. I'm going to drop FI from my watch list. No need. Flex. Maybe what I'll do, not yet, but pretty soon I'll update the watch list on the group so that you can orient with us. It's going to be fluid for the next week or two. Flex looks great, but there's no trade for us yet. Fox looks like it's still kind of lingering down below, waiting for that to show some signs of life. I loved GE Vernova. I just couldn't trade it because of the earnings. I wanted that one. I'll keep watching that. That's a good leader. Gold. Is gold as an anti-tariff / inflation trade still at play? I would say it is. Just made a higher high. If it makes a higher low, if it doesn't, break below, if it breaks below 300, maybe not. Is anyone actively trading gold right now? I think we all did the last one, thanks to Glenn. Great entry coming in back here. Caught a nice piece of it on GDX. I think we're looking for another one. I'll make sure I text them and be like, "Hey, you got another one developing for us, buddy?" If I put the trade on, it'll jinx it. If I put it on, it'll jinx it. Oh, Miguel, I love that. I did silver. My kids are now 20 and 22. I only started it like 2 years ago. And I did just tested it out, but they each have some chunks now. Such an amazing idea. Right. Just even like little 1 ounce, 2 ounce little things that are like set $30-$60, things like that. I think back to how many crappy toys they got that I could have just switched that would just be around now and just like, anyway. Coins. Yeah. And they love it. My son has like this little chest. He keeps it all in. I'm like, okay. So well done you. I'm a jinx to gold, so I'm not going to trade it. But if Glenn puts it on, the jinx is off. I took the last one. It worked beautifully. So we're all in the clear. Google. I got to speed up so we can talk about, I'm going to take 5 extra minutes. I don't know why I'm saying that like it's new. I like Google on a new high. I like Goldman on a pullback. I like Robinhood. Robinhood was the one that I was going to pull it here early, and I'm like, you don't take anticipatory trades at a minus 2.5. And I didn't. And then when it was here, I was like, I didn't love the candle. And then it was here. I'm like, shit. Now it's too close to earnings. It happens. So if that happens to you, don't be like, oh man, I thought that was the only one. No, God, we all do that all the time. All the time. That's why we watch so many stocks, to make sure we can get the good signals, right? And when you knew exactly what we were looking for there. We were talking about it, and you look back and you're like, I feel like I should have had that. But no, I feel like I could explain why I don't. Anyways. Tell me if you've had that lately where you like wanted to trade it, then you didn't, then it moved, and then you're like, now I'm too late. Of course you did. Of course you did. You're all nodding your heads. I know you are. I like Howmet. The aerospace seemed to be doing pretty well. Bitcoin. Look at Bitcoin rallying again. Maybe we should think about that. IBM, Big Blue. Fond of that company, of course. ICE. I don't know. Okay. For me, it was KR. More than I like to admit, right? Of course. Almost with Tesla. There you go. KR. So for me right now, it does feel like there's a couple of defensive things setting up. I've got Duke Energy, utilities, defensive. I've got Kroger, groceries, consumer staples, defensive. Okay. That's fine. That's fine. If those move while everything else pulls back, that's good balance for us. Meta looks like it may be going to do something prior to earnings, but nothing for us to trade. I like Morgan Stanley on a pullback. I like Microsoft. That was a good pickup. The higher low. We were thinking about that one. I think someone in the group took it. Netflix bullish out of earnings. And Nvidia carried it. Looks great. Why not? Look at that strength. Accelerated. Same thing with PLTR. I'm in both of them. They both gave a nice signal. This was our Nvidia trade. Got some good movement out of it. We talked about PLTR here. Anyways. PM overextended. That's a no. Roblox overextended. Reddit's another one that I liked on this one. I don't know why I didn't take that one. I talked about it. I was looking for that higher low. If you remember, if you haven't, like, this is our pattern, right? We look for these consolidations. We look for the big buying push. We look for it to pull back and make the higher low. That's our pattern over and over again. Now what? Well, if I miss this one, I'm not like, oh, great, throw it off the list. I'm thinking, great, next time it pulls back, because this started back here just like this one did. So if we're going to get one of these, hell yeah, let's get ready for that. I don't know if that's what's going to happen, but if it does, I want to be ready for it. Rocket Labs. Yeah, starting to move again. RTX is volatile. There's not much you can do with that right now. SESO looks okay, but I like Duke better. SPY looks all right, but we're at resistance. We need to see it bust. TJX, how about that? I like that one. I'd put that on if it gives us a push. Just made a new high. Come on, TJX. I was shopped there the other day. Bought some dog toys. Good prices on dog toys. Toast, no. TPR. We go through dog toys quickly at our house. Every indestructible bone I've seen, my dog goes through it like it's nothing. Like it's nothing. Tesla gets bullish again. There was some news that came with this. What was the news? Kami, did you see it? There was some news somewhere. India. Thank you. Oh, Kareem saw it. India. Yes, that's exactly what I meant. There was big India news. Thank you, Kareem. Up on the current events. TSM. I agree. Kami showing strength there. But my PLTR, that's my dog. NVIDIA not far behind. PLTR was a top 3 from 2024, which puts it as a most favored status for the entire year, and it's already starting to work again. So, Twilio's showing something, but they've got earnings just around the corner, so be careful there. Here's Visa. I like MasterCard better. Here's Walmart. I think I can. Who's still in it? Anyone pull out? Did they pull out some? Pull out all? Still in? I am too. I think I can. All right. Let's look at the plan. Last week, you worked on this, which is the trade log, where you're filling in the trade log. Okay? This week, you're working on this. You're not actually doing the work. On this page, all you have to do is fill in. These are just, oh man, I'm about to get my.
This is a reminder. Water the bonsai.
I'm getting my bonsai reminders so I don't kill my bonsai trees. And it fully, Corrine said, love it. Yeah, so I think that one, if we have Duke Energy and KR setting up as defensive, then my position is Walmart will hold and advance as well. That's another reason why I held on to that. So just so everyone knows. You put in your beginning equity and your trade risk, and you want to adjust it every time. So this is a good marker for knowing, where would I be, what's the amount of money that I have, et cetera, et cetera. So yeah, this will help you understand how your risk per trade is, what your loss to risk ratio is, how long you're in winning trades, how long you're in losing trades. This will help you know how big your winning trades are, your losing trades are, your reward to risk is, your expectancy, your reward to risk ratio, and Kelly percentage, et cetera, et cetera. So this is everything. If you don't have this, it's like you're driving down the road with a blindfold on. It's not good. What's the name of that log in the download section? Thank you for asking, Kareen. Let me bring it over. And let's go into the group downloads. This is the option trading log. And if you're doing stocks, here's the thing. Mine that I have there actually has both on it. And it's a pain in the ass. If anyone ever wanted to be like, Scott, I really want to keep them together. I want to do stocks and options together. I want you to show me what you do on yours to keep them both. I will. Otherwise, it's probably easier to keep stock log on one and option log on the other. So this is the option log here. You pop in, download yourself a blank copy, mark it as keep it as a template, and then have one for paper trading, have one for live trading, and then every 100 trades you're doing a new one. It's a beautiful system. All right, that's it for me. You guys, this was God, I have so much fun. It flies. I really enjoy these kicking off my Sundays. I'm gonna go get another cup of coffee, have some breakfast. Hope it doesn't rain so I can get the rest of my yard work done. Enjoy the rest of your Sunday, everybody. I'll see you in the morning. We'll be thinking about each other as we look at the futures tonight. And we'll see what it looks like in the morning. Go from there. Enjoy the rest of your day as always. Happy trading.
Record.